Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
And this episode is brought to you by Coinmetrics, and here is the Metrics Minute.
This is the Metrics Minute brought to you by Coinmetrics. After the merge, Ethereum Classic hash rate quickly jumped to over 200 terahashes per second, so about 25% of all Ethereum hash rate switched over to ETC. ETC miners have made just $5.7 million in revenue in the 10 days after the merge. Before, ETH miners were making over $20 million per day. So slim pickings on ETC. Bitcoin hash rate recently reached 225 exahashes, which surpasses May's peak of 220 exahashes, thanks to the emergence of newer and more efficient mining hardware. The Beijing-based mining pool Poolin froze withdrawals, trades, and internal transfers because of, quote, liquidity issues, causing their estimated share of network hash rate to fall by nearly 50% in a matter of days. That's the Metrics Minute.
And this episode is also brought to you by Talos. If you are a participant in trading digital assets and you haven't heard of Talos, then you need to change that. So if you're a buy-side participant, sell-side, traditional finance, or a crypto-native firm, you can use the Talos platform. You can connect to basically the whole liquidity landscape for execution, pre-trade, post-trade, and do the trade itself, obviously. So you can connect through the API, you can trade on the GUI, and they will connect you to prime brokers, lenders, investors, custodians, exchanges, OTC desks. Basically, the whole crypto liquidity aggregates on the Talos platform. They have a world-class leadership team, and they have the best technology in the business. So head over to talos.com to learn more. That's talos.com.
Well, it's been quite a week out there in TradFi land.
Yeah, everything's melting down. So what's going on here with the pound? Is that even a thing anymore?
Yeah, pound, not good.
We were bashing the euro last week. I didn't realize the pound was going to fall too. It's kind of all happening.
Yeah, so I guess Liz Truss proposed a budget and markets puked at that and yields rose. I think it contained tax cuts, so let's say it was just sort of Reaganomics style budget. Yet, however, if you are going to try and do that while you're not the issuer of the world's reserve currency, you're in for a bad time. And so investors in the British treasuries, I guess they're called gilts over there. I didn't know that. They hated the budget, and those interest rates or yields rose very quickly. And that caused a bunch of British pensions to have financial problems. And weirdly, these pensions had all bought these derivatives and they faced a ton of margin calls from the investment banks that sold them the derivatives. And that forced the Bank of England to basically resume QE and bail out the pension funds. So that happened in England.
Which is unbelievable that this all happened within a week. The chart looks like UST or maybe one of these like IOTA charts, just a very precipitous fall.
Yeah, I mean, the rest of Europe's not doing too hot either. The somewhere north of Denmark, there's a giant natural gas spill. Just based, Nord Stream. Is it Nord Stream 1 or 2 that has a hole in it?
I think it's both. I think.
So yeah, could be both of the Nord Streams. Basically, Europe's not getting gas anymore. Unclear who did that. But the net effect is Europe is going to be a vassal state for the U.S., basically. I mean, they're going to be completely dependent on U.S. LNG imports in order to keep their industrial sector alive. I don't know if the German industrial sector is going to be competitive on global markets anymore if they're not getting Russian gas.
So the obvious question is, what happens to crypto assets, and how does Bitcoin, how does Ethereum play in this? This doesn't necessarily mean that those assets are going to catch a bid.
Not necessarily, but I'm seeing green shoots. I'm seeing Stan Druckenmiller came back, and he's now sort of maybe pro-crypto again. All of the established currencies, aside from the dollar, are puking. Japan, the EU, and now the UK have effectively reversed course, and they're engaging in explicit or implicit yield curve control. All those three central banks. So they are effectively stopping their hiking cycles and printing money again. So the enormous weakness in all those currencies.
You kind of have to have a way to stitch it from where we are now to a world where Bitcoin or Ethereum are big, huge global macro assets. And I think the link there is likely a central bank putting it on their balance sheet or a sovereign wealth fund taking an enormous position. It wouldn't be the craziest thing to see a Saudi Arabia style country make a large purchase.
Yeah, I think that's kind of my conclusion is, this events of the last few weeks have really driven home the fact that the world is fragmenting into kind of an Eastern bloc of, let's say, Russia, China, and India as one sort of industrial and political entity, and then the West. And there won't be that much trade between those two blocks. I mean, the literal gas pipeline, that main economic linkage between Russia and the West, was severed. There is now it's not just an economic war; it's a political war between the two blocks. And I don't really know what that means for currencies or like stability or anything like that. But sentiment around crypto is kind of picking up. Like the New York Times had this article: currencies around the world are tumbling except Bitcoin, and then Bitcoin sold off after that came out. But I mean, like we're seeing basically what amounts to a sovereign debt crisis globally. That's what a lot of Bitcoiners sort of thought would happen. It's just that when it happens, it's not really a good time for anybody. So it's not like something you can celebrate.
No, it's still a lot of pain out there, but interesting times we live in. Busy podcast week. Ria sat down with Christine Kim from Galaxy Research, talked about the Ethereum merge. Thought that was a great episode.
Yeah, second on the merge from us. And then you also sat down with Sergey from Axelar to cover blockchain interoperability.
Very smart guy, that's Sergey. Blockchain interoperability is a very hot category right now.
I wonder if it'll ever actually be solved.
Oh, I think so. There's just so many smart people working on this, so many different approaches. Axelar is obviously one of them, but the amount of talent in the space is just crazy.
A lot of deals this week as well.
Tons of deals. I mean, like the deals are not slowing down. That's another thing that would be a cause for optimism here, is just how many things are being built and how much capital is still being deployed into, I'd say, primarily early stage stuff. I'm not seeing a lot of Series Bs, Series Cs, but we have some interesting deals this week, so I guess we'll hop right into it.
All right, first one up is Quill, KWIL. They're a decentralized database protocol. They raised $9.6 million from FTX Ventures, DCG, and others.
Next one is Nibiru. This is a crypto derivatives protocol. They raised $7.5 million at a reported $100 million valuation from Tribe, Republic, and Kraken.
Then we have Sintra, an NFT marketplace and social app. They raised $2 million from Lemnis Cap, FTX, and Chorus One.
Strike is next. This is, of course, Jack Mallers' company, Bitcoin Payment Processing. I guess Lightning Payment Processing would be a better way to describe it. They've raised $80 million. It was led by 1031 and a couple endowments here. So Wash U and University of Wyoming, these endowments going direct.
Was it University of Wyoming that also did a direct investment into what's now called Custodia? Am I remembering that correctly? So
that's
they're
right.
no strangers to directs. Yeah, really interesting.
And they like their Bitcoin.
Oh, yeah. So, yeah, Strike, one of the most visible companies in the Bitcoin space, arguably. Next up, we have Tactic, a crypto accounting solution. They raised $11 million from FTX, Lux, and Exponent Founders Capital.
Next one is MPCH. This is, of course, a crypto MPC company. They have raised $40 million from Liberty City Ventures, QCP, and Mantis.
Then you have Eclipse, a blockchain scaling project. They raised $15 million from Tribe, Tabia, and others.
ChainML, which is a decentralized machine learning protocol, raised $4 million from IOSG, Hashkey, SNZ, and others.
Then we have Space and Time, a decentralized data platform. They raised $20 million from M12, which is Microsoft's venture arm, Framework, and Hashkey.
This is I've seen this company present at conferences before. Very dynamic founder. I'm excited to see where Space and Time goes. Next one up is Nexo. So they have acquired a minority stake in a bank. The bank is called Summit National Bank. So I guess they're trying to move into the U.S. banking sector here. Is that the take?
Curious, given Nexo's appearance in the news of the week section, which we'll be covering shortly.
We'll get to that. They're in the deals and the news. By the way, this is a newsletter. We don't say that enough. If you want to get this deal rundown in bullet point form, just go to our website and subscribe to our newsletter at the bottom of the page, and we'll send it to you on email too.
Yeah, you basically want to be in the deal section, not the news section. If you're in the news section, it's a possibility something's gone wrong.
I had a couple people ask me where the bad boys section is. You don't want to be in the bad boys section.
You don't want a bespoke theme tune.
No, you
certainly don't want that.
You don't want that. But yeah, being in the deals section is a good place to be. Being in the people that we spoke with on the podcast this week, that's also a good section to be in.
That's the good one. Yeah. You don't want to be in the regulatory section. There's plenty of that. There's a lot of that's every week.
There's a lot of that.
So we'll cover Nexo in a second. Next up, we have Aqua. It's not agua. It's not agua. It's aqua. There's a lot of agua here right now, let me tell you.
Yeah, you got rained on down there.
We're swamped in agua down here. I mean, it's actually extremely harrowing, some of the images coming out of the west coast of Florida right now.
Yeah.
Miami dodged the storm. Everyone told me, Nick, don't move to Miami. There's hurricanes. Well, we haven't. I've been here 18 months. We haven't had a hurricane.
Knock on wood. It's still early in the season.
We beat the odds so far. So Aqua is a Web3 community platform for gamers. They raised $10 million from Digital, which is a fund associated with Stevie Cohen.
Next one up is Coral. This is a dev tooling company building on the Solana ecosystem. They raised $20 million from FTX, Jump, Multicoin, and others.
Then we have Acon, not to be confused with the artist. A Web3 onboarding solutions business. There is $10 million from Morgan Creek, Blizzard, and Avalanche.
Next is Block Green. This is a decentralized lending platform. They raised $3.7 from Founders Fund, Coinbase, and others. Block Green, that's kind of like an ESG type of thing, but Founders Fund doesn't like ESG. I wonder what the deal is there.
Then we've got 3 commas, which is that a reference to Silicon Valley, the show? Or maybe it's just a reference to the number.
I think it's a reference to being a billionaire.
Right. So anyway, they're an automated crypto trading platform. They raised $37 million from Target Global, Alameda, Jump, and Copper.
Next up is Re. This is a reinsurance protocol. They raised $14 million from Tribe, Framework, Morgan Creek, and others.
And lastly, we have Deribit. Interesting deal here, the crypto options exchange. They've raised from insiders at a $400 million valuation. What is going on here, Matt?
So this is an interesting one. I don't have any insider information on this, so I'll throw that out as a massive disclaimer here, but I have some theories on what's going on here. So Deribit had previously raised at a much higher valuation. Maybe we can pull that up here, but it had been, I think, valued at $2.1 billion in its last funding round, which was in the summer of 2021. And it's a crypto options exchange, and it's known to have been spitting out dividends, pretty chunky dividends, I might add. The interesting thing here is that this is a Three Arrows Capital investment. So Three Arrows, along with another venture fund, had this big SPV into Deribit. And you can Google around for Three Arrows and see all the potential shenanigans around the raising of that SPV. But the fact is, they were investors in this thing. And so if you look at this and you say, okay, well, how is it that Three Arrows, who, the founders are on the run, they obviously have massive legal headaches, they're going to be getting dividends from Deribit. And I'm sure Deribit's not really happy about that, and that presents a lot of problems. And I'm sure the other investors on the cap table aren't very happy about that. So then you get to the point of, well, how do we address that? And I don't know if this is what happened, but I was thinking that this might be like a pay to play. And so to explain what a pay to play is, so company is distressed, let's say, and they're going to raise follow-on capital. They aren't able to find a new investor to come onto the cap table. This is how these things usually shake out. Let's say the company needs to raise, let's just pick a round number, $100 million, and they can't do it. So an insider steps up and says, look, we'll lead this round. It's going to be at a down round. And there's a pay-to-play initiative, which basically means if the company's raising $100 million, you do the pro rata participation across the preferred equity stack. So if you own 10% of the preferred equity, your pay-to-play minimum is $10 million. And if you don't invest the $10 million, then something happens to your shares typically. So usually what would happen is those preferred shares would get moved over to common equity, and potentially even they would get cut in half or cut in a fourth and moved over to common equity. So it basically wipes out your shares as a preferred shareholder if you don't participate in a pay-to-play initiative. And the valuation kind of doesn't matter as much in these things because you're basically just restructuring the cap table. And typically what happens is you option up the founders and the key management. And so a lot of things get pushed from the preferred stack into the common, and you would say, all right, well, doesn't that crush the founder? Are they still going to be motivated? No, you usually bump them up. So you give them a huge options grant. So if this is a pay-to-play initiative, my suspicion is that Three Arrows is not going to be able to find the money to pony up on the pay-to-play. And they're going to get wiped from preferred equity to common equity, probably at some massive haircut. And then you're going to have the founders of Deribit probably optioned up. And so they care a little bit less. But the interesting thing becomes if you're liquidating Three Arrows and Deribit's kind of a marquee position, I think this thing's like worthless right now. If my suspicion is correct here that this is a big pay-to-play down round that they did not participate in, I think there's very little value there for Three Arrows, which if you compound this with the Starkware warrant where they weren't able to exercise, it looks like two of the crown jewels in the Three Arrows liquidation are like zeros right now. So I'll pause there, but that's sort of what I think might be going on there.
Yeah, because that explains the puzzle of why they would have raised they raised $100 million in 2021 at $2.1 billion valuation, and then why they'd raise 40 at 400 a year later. I don't think market conditions justify such a precipitous decline in valuation. So I think your theory that it was kind of a cram down makes sense.
Yeah, I mean, these guys are profitable. So my guess is that what's also happening here is that they're, they just didn't want to be paying that dividend out. So there's a quote from one of the founders that the valuation doesn't really matter. And it's kind of true. I don't think the valuation really matters that much. I think that the founders are probably getting optioned up, and I think the insiders who mattered are all participating, and now they're going to reset and they'll continue with the dividend stream. So I think who gets hurt here is Three Arrows.
Yeah. So kind of interesting. We're seeing a lot of these storylines from the, event of 2022, the credit event, whatever you want to call it, the crypto banking crisis. We're seeing them wrap up and wind down. And I think we need them to be resolved before the market can psychologically reset. You know what I mean? Like, you couldn't have Do Kwon and Machinsky and Sue and Kyle running around and not having, dealt with the consequences, basically, before the market could recover. That's my genuine theory here. And we're at 2 out of 3 right now.
I guess, but I don't know. So the Three Arrows guys are still on the run, and they probably have new faces at this point. Do Kwon, there's a red notice, which is not actually an arrest warrant. I think that was erroneously reported, but Interpol issued a red notice on Do Kwon, so he's still out there. Machinsky is still not in jail, so I don't know. We're not done.
Well, yeah, it might actually be 0 for 3. But yeah, so yeah, Do Kwon is still tweeting playfully, despite it, I guess, the world's police agencies coordinating to try and locate him. But that's progress. That's progress. The Koreans have finally identified that I guess he committed some sort of alleged crime. I think there has to be one in there.
I guess it's not clear to me from the outside what they're going to get him on, to be honest with you. I'm sure that there's things around the money movement there, but it's not screamingly obvious in the same way that it's screamingly obvious for the Three Arrows guys.
I think it's very clear that, there is misrepresentation about the reserves, the system itself, who was backing it, the timing, the public statements that he made. If you consider it as a kind of a security, then you have to basically be truthful, and you're really constrained in what you can say, and he wasn't in any way. So anyway, we'll see what happens. The Three Arrows boys still on the run. Machinsky, however, has now stepped down from Celcius. So I guess that's the end of that story.
Definitely not the end of that story, but it's the end of his legal bills being paid by Celcius, I guess.
Right.
I don't know. I don't know what to there's a lot of bankruptcies, or not a lot of bankruptcies, a lot of resignations this week. So Machinsky's gone, the CFO of Voyager stepped down, Brett Harrison stepped down. So he's the FTX US CEO.
And tying those two together, FTX won their bid for the assets of Voyager, and then also indicated they might want to bid on the Celcius assets as well.
Yeah, so it looks like the bid here is $1.42 billion. It's $1.3 billion for the customer deposits and an additional $111 million, up to $111 million in consideration. So it's a customer acquisition grab, I guess, is the way to think about this.
So this is kind of long overdue. I was surprised that didn't happen, but 7 state securities regulators, including California, have brought actions against Nexo in connection with their earn interest, their crypto interest accounts, which is sort of not surprising given the various states enforcing against BlockFi and Celcius. And it was interesting seeing Nexo kind of floating around, seemingly unscathed during the credit crisis and unworried. But basically they're not going to be able to offer that product in the US anymore.
Nexo's such an interesting one. I hear their ads on podcasts, like NLW's podcast has a Nexo ad. I've never met anyone from Nexo. I've never met anyone that used it. And I've never really met anyone who has like a very informed opinion on it. It just seems like a black box.
I've met some Nexo folks, executives. They seemed friendly enough. But very little information about that company.
I mean, they must have the best risk management on earth. I don't know how they didn't have any exposure to this. They're like the only crypto lender that is claiming to not have taken a hit. I think they're literally like the only one.
So right after we recorded last week, one of the most interesting kind of regulatory actions, I would say, ever happened.
Yeah, the CFTC DAO incident.
CFTC DAO. So it's either the Ooki DAO or bZX. Basically, they're the same thing.
I had never heard of this thing.
So I think bZX was hacked, and that's why I knew about it.
Okay.
So there's maybe it was a different bZX. Anyway, so the CFTC filed and settled charges against the founders of bZX for illegally offering leveraged margin retail commodity transactions, which obviously you'd have to be a Futures Commission merchant, FCM, to perform those actions, and then the standard thing of not having a compliance program. So that happened at the same time. So that sort of first thing is not that surprising. Basically, you're doing something that ought to be CFTC regulated in the US to US entities, and you're not in any way trying to comply. The second thing was crazy. So they have charged the Ooki DAO, which is the DAO which governs the protocol, basically. So they went from sort of a centralized model to a DAO model, and they charged the entire DAO with the same violations. And they're seeking restitution, disgorgement, monetary penalties, trading and registration bans, and against the DAO. And the way in which they served the DAO is astonishing. I don't know if it's allowed, really.
Well, so what did they do? They put it in like the Discord channel or something?
Well, yeah. So I mean, that's the question. How do you serve a DAO? So what the CFTC did was they went to the Ooki DAO website, and turns out there's one of those little chat bots where you can, provide feedback, and they put the notice in the chat box, and that was one of the ways in which they achieved service. The other way was they made an account on the Ooki forum, the governance forum, and they posted the notice in the forum.
It's a good thing they didn't vote, because then they would have been part of the DAO.
So I guess that's allowed. Although I guess, there's been interesting ways to achieve service, like with NFTs in the past. I think that's one way. And so here's the problem, is the Ooki DAO is not wrapped in an LLC or anything. So it runs the risk. I think Preston Byrne pointed this out like years ago. As a participant in a DAO, just because it's not incorporated in any way doesn't mean you're not liable for the actions of the DAO. In fact, I think the legal theory is, absent some actual legal structure, you might be jointly and severally liable for the DAO, personally, on a personal basis. And so I didn't know what that actually meant, so I looked it up. It basically means every individual composing the organization, whether it's a general partnership or an unincorporated association, is liable for the entirety of any, torts the DAO might be implicated in. So anybody, in theory, that is a member of the DAO and considered part of sort of the leadership or the governance, can actually be considered liable in that case. It's really not a situation you want to be in.
No, and it's going to be interesting because a lot of these people are obviously pseudonymously participating. Is this going to get to the point where CFTC is looking at on-chain addresses and trying to de-anonymize people to find out if they're in this DAO?
Yeah, I mean, it's not hard to de-anonymize people in crypto because they typically buy ENS names and then do transactions, and maybe they use that ENS, they use the username somewhere else. I mean, I don't think it would be that difficult to identify the key participants in this DAO, because remember, there wasn't a lot of precedent for this. I mean, DAOs haven't been subjected to this kind of legal treatment in the past, even though you could have anticipated this if you knew a thing or two about that side of the law. What's interesting is, if nobody comes forward and answers the CFTC's lawsuit, they will probably win a default judgment in California, meaning they will just automatically win the case.
Yeah.
So someone's got to
step up.
Someone affiliated with the Ooki DAO or bZX has to raise their hand and be like, okay, all right, guys, let's talk about this.
I mean, this feels like a case for the EFF or Coin Center or something to pay for some legal bills for some poor soul to raise their hand.
I mean, does Coin Center want to take up the cause? There are ways that exist to have DAO LLCs, though. Of course, there's all these proposals. There's the Lao, and Wyoming has a law about DAO LLCs. So there are, in theory, these legal structures that you can put around a DAO such that the sort of directors of that DAO are not personally liable. But then there's the fact that it's less decentralized and less cypherpunky. And so a lot of these DAOs we're seeing in crypto just don't have any structure. And then this is kind of the risk that you run.
Crazy story. I mean, a lot of people are asking for the CFTC to have greater oversight. This might cause some folks in the crypto industry to take a little pause there on whether or not that would be something that they would like to see.
Yeah, I mean, the CFTC was considered the good regulator. That's the sort of the pitch they're making to the industry. This is probably not going to help with that kind of goodwill. As far as a legal precedent is concerned, this would be a really interesting one, but really tough on people that are sort of chronic DAO governors. I mean, these kinds of organizations get sued all the time, and just because there isn't a website with the names of the individuals Just because you can't necessarily identify the people and because there isn't a formal organization doesn't mean the law doesn't consider it a de facto organization. Unincorporated associations can come to exist even if it's just sort of you're implicitly working together on a common enterprise. There doesn't need to be anything written down about it.
So it's going to be an interesting one to keep an eye on. Hey, did you see that Powell came out this week and he said that the Federal Reserve has decided not to pursue the digital dollar? That's not going to be a thing.
That first good decision the Fed's made in years.
I mean, thank God. Can you imagine? When was the last time the federal government undertook a massive technology project direct to the populace and it worked?
Yeah, it's shocking that they kind of came to their senses around this. A retail CBDC never made sense, though. I mean, the Fed is not a retail-facing organization.
No, it just doesn't make sense. It would completely cripple the commercial banking sector. So, in a way, it's surprising that it was out there for as long as it was. But I would think that this would further unleash stablecoins as just a killer app here.
Yeah, I've long been of the opinion that we will eventually get the USD CBDC, as I call it, a public-private partnership between stablecoin issuers and central banks. One way to achieve it is just to give the stablecoin issuers direct access to the central bank itself.
You could do that tomorrow. You could just say,
yeah,
USDC, hey, we're going to give you a Fed Matra account.
Yeah, and then there's no question about the integrity of the reserves or the liquidity. So that basically gets around a lot of the issues some of the more sophisticated market commentators have around stablecoins, is they think, oh, they're sucking liquidity out of the system, or, oh, they're going to become impaired and they're going to have bank run dynamics if there's a liquidity problem with treasuries. Well, very simple solution. Just give them access to the central bank directly, and then they're issuing effectively dollars against that. So I think that would be my desired outcome.
I mean, in a world where Japan is just chucking treasuries as fast as they possibly can, here's a bid for treasuries in the market.
Right.
USDC has an insatiable appetite to buy treasuries right now.
Yeah, so Japan defending the yen by selling treasuries, it's interesting because they are the largest holder of treasuries. And, the UK now also forced to, print to potentially keep yields down. Certainly could happen here. And, the only thing stopping it is just that there's some bid out there for treasuries, but I don't know how much longer that's going to be the case. And in a high inflation regime, I don't know why anybody would be wanting to buy U.S. treasuries.
Well, you would if you structurally just had to have a stablecoin on a blockchain. So I don't know how big that market is, but it's a lot bigger than it is today, right? Like the demand for these things is unbelievable. And so if you had a stablecoin bill that made sense, I think you'd have a huge bid in the market for treasuries.
Well, yeah, you have to find a buyer that's willing to tolerate inflation that's 5 points higher. Well, I mean, generally speaking, inflation running higher than yields means that nobody wants to hold it. But holders of stablecoins don't get any interest payments whatsoever. So they just get the full inflationary hit.
Yeah.
But they're willing to tolerate that because, I guess, in theory, they're getting access to crypto markets with all of the associated revenue generating opportunities. So then you imagine that there's some implicit sort of crypto yield to having stable coins.
Yeah, and you're getting settlement finality. Maybe you value that more on a intraday basis, that type of thing.
Yeah, what's the term? The convenience yield of cash, basically, right? Because it's the same for physical cash. It has a convenience yield such that you forsake the interest payments, but the fact that cash has good properties makes up for that.
And another way to think about this is a structurally legal way to prevent foreign people from getting those interest payments. It's kind of an interesting, from a geopolitical perspective, it's an interesting thing to think about, is that if you're holding stablecoins, obviously not getting the interest payment, there's a huge demand outside the United States. So U.S. corporations like Circle and eventually banks will start to really capture the economic rent there. And I don't think that a lot of folks that are opting into dollars and not getting the savings account internationally like really would care that much. They just don't want to be holding whatever crappy currency is in their country.
Yeah, because the dollar is crushing every single currency in the world right now. I mean, it's not good for sort of global growth or anything like that. Yeah, you prefer the dollar even if it's inflationary in the US to a certain degree. I think this is going to become a new frontier in diplomacy is stablecoin wars. You know, it's already happening in Europe where they want people to hold EU stablecoins instead of dollar stablecoins.
Yeah, people just aren't going to do it. I mean, there's one apex predator of fiat currencies, and it's the dollar.
Well, I think it just portends a return of capital controls.
Yeah.
And those often accompany times of monetary repression. You have to force people to hold government debt, basically, and they try and offshore their wealth. Imposing capital controls is going to be much, much harder in sort of this digitally native world. I think that's what a lot of these economists that you're saying, oh, it's just going to be like the 1940s and governments are going to be able to reset their balance sheets and they're going to force everyone to earn a negative yield and hold real yield, hold government debt, things like that. People just won't be subjugated this time. I mean, you have the opportunity to hold any kind of financial asset you want.
By the way, we didn't say it. We're recording this on a Wednesday, so something big will probably happen tomorrow.
Yeah, so on the Brink GM app, gm.xyz, I think /c/on-the-brink, we solicited on the Brink bingo. So basically things that we say a lot on this show. And one of them was you saying we're recording this on a Wednesday, so we're going to miss important stuff tomorrow.
Oh, I didn't see that. I do say that a lot.
Yeah. There were some quite good entries.
What else do we have out there? Let's pull it up.
Okay, so my entry, this is the free space, is using SEC Rule 15C3-3.
Yeah, you got figure it out, SEC 15C3-3. We need some clarity.
So that's the free space because you say it every episode. iTurner.eth said, you say Three Arrows shenanigans a lot. You say Tom Brady.
Yeah.
A lot.
Yeah.
You say Bitcoin spot ETF when. I say frankly a lot, apparently. I don't know, I said frankly a lot.
Okay.
Gyges.eth said we tend to say, quote, Fidelity is building a monster over there.
They are. That's true. They are building.
Yeah.
I don't know how much I've said that, but that's true. I mean.
He also said one thing we say is, quote, if you're a traditional financial institution, you don't have a roadmap for getting in the game here. What are you doing?
That sounds really smart. Do I say that?
Yeah, apparently that's one of your catchphrases. Yeah. I say this is a regulatory podcast, which is true. Hate to see it, apparently.
Yeah, you say that, yeah.
In other news this week. I think you say, now this is a new submission from me. You say, well, let's dig into that, and we'll keep an eye on that. So,
someone, Fonz.eth says ETH will flip Bitcoin. Do you say that?
Who said that?
I don't know if anyone said that. I think there've been some off the podcast conversations about that, though. Not to stir any controversy.
I mean, I don't know if it's going to flip Bitcoin in this market regime. However, I do think it would be good for Bitcoin to be flipped.
Oh, all right. So that you're getting out ahead of it. I think eventually ETH will flip in Bitcoin, but we'll see.
So my reasoning for that is it will allow the Bitcoiners to purge themselves of the false prophets that led them astray.
Oh, that could be
and
true.
So I think it'll be a good opportunity for a leadership change. So that's why I think it would be good for Bitcoin.
Well, this is a lively community. I encourage everyone to hop over to our community. A lot of good submissions here.
Yeah, look, we have 345 members. We're working on our digital trinkets for members. So those are inbound. And it's basically the home of On the Brink discussion.
Yeah, if you want to chat about it, it's not a DAO, so you won't get sued, I don't think.
No DAO.
No securities offering, no DAO.
No common enterprise, certainly no expectation of profit.
Just good, clean fun. By the way, speaking of the Tom Brady thing, I'd like to have him as quarterback right now. We've got a situation up here. Mac Jones is out.
Yeah, things aren't good with the Commanders either, I'll tell you that.
No.
I'm thinking of switching affiliation to Miami. Might be the move.
I think no, you can't do that.
Well, I live here now, so.
I once had a business dinner with a guy that was like from a certain, I'm not going to give it away, but he was from a certain jurisdiction, and he said, well, now that I'm in Boston, I'm just a Patriots fan. And if you want to lose respect from me in one sentence, that's how you're going to do it. You're just going to move to a new city and just hop off of your affiliation for an NFL team. What type of fan are you?
But what if your prior affiliation was the worst team in the league?
I mean, it would have to be
Shouldn't you
just
not
so
get
bad.
into
It was just, like, I don't know what would ever cause me to just stop being a fan of who I grew up rooting for. It just seems crazy. If anything, I'm going to lean more heavily into that. I'm going to find the local watering hole that supports my team. I'm going to do some business there.
All right, I'll see if there's any Washington Commanders bars in Miami.
You're not going to find anything down there.
No, definitely not.
All right, so that's it. We'll break in tomorrow if there's any huge news.
See you Monday.